My name's Daniel from BGL Corporate Solutions. I've been here for a little while. Love what I do, love the people I get to work with, and David and his team are absolutely part of that group that I love to work with. We've had a great association and affiliation with Change GPS and the team of Tim and David for quite a while. And what I love is what our products together bring and what we as people together bring. And the way I look at it is, if you're running those, an accounting practice, and you're running, or you're providing services to your clients, which I know that you all are, our value proposition and what the products like Change GPS can do for you just can make your life and engagement so much easier, so much more profitable. And one of the things that I've been really impressed with about the conversations that David's been having to the greater community is around attributing the value to the services that you provide, and not underestimating or undervaluing what you do for your clients because you feel that you're compelled to behave or respond in a particular way. What you do brings value, accountants, and there needs to be an appreciation and a value attached to that, and your clients will respect you for that if you take a position on it. So I'm rapt to be able to introduce you to David. David will run with the presentation. Feel free to ask questions during the presentation, because I'll be looking at what comes through, and then if I need to, I'll interrupt David during the presentation and go through the questions with you. And then at the end, we're probably going to do a little bit of a Q&A, an open discussion around the topic, where I'll have a bit of an engagement with David. So David, start your screen, start sharing. Loved having you on board, and I look forward to what you have to present.
Thanks very much, Daniel. Thanks for that fantastic introduction. For those who don't know me, I'm the CEO at Change GPS. You may have seen me on past Reg Techs as I've emceed it virtually last year and around the country the year before, which was obviously fantastic. And of course, I host the From the Trenches podcast with BGL, has been huge supporters of right from the start. Daniel and Ron showing tremendous belief in giving a voice to accountants. It's probably why BGL is so successful over the years. Today, we're talking about 5 practical steps to compliance advisory, just like that. And I'm going to start with something that is an uncomfortable conversation to have, particularly at the moment, particularly if you're the type of accountant who's dealing with many customers who are sitting there trying to apply for state-based lockdown grants, maybe aren't doing so well. I think as accountants, we know that our mood when we get home at the end of the day is largely driven by the conversations we have with clients during the day. When our clients are doing well and we've contributed to their success, we're always very upbeat. We certainly feel like we're part of the success. But because we feel so close to our clients, I ran my practice for 5 years. I was a practicing accountant for 10 years, and I'm standing at the moment in Change Accountants and Advisors, which is a large accounting practice up here in Queensland. You also ride the lows. And I've had many a day where I've had lows with my clients, many a day when my father's come home after having a tough day and some tough conversations with clients in his practice. He's been in public practice for 41 years. And at the moment, some of those conversations are happening. And I think we've all had to change the way we communicate, show a lot more empathy than we've ever been able to do, and sometimes had to do that under some trying circumstances when we're exhausted. Certainly during JobKeeper, that happened quite a lot. And so today's going to be a little bit challenging, because we're going to talk about having a different type of conversation with clients, because nailing compliance advisory is about changing the way you talk about it. It's not about changing your skill set. You've already got the skills. It's changing the way the conversation works. Now, before I get started, I want everybody to get super active in the chat. So get active in the chat. When you jump on the chat, make sure you select the box that says select all panelists. I'm going to change that, and attendees. And that way everyone's going to be able to see what you're writing about, and everyone's going to be able to participate in the conversation. If I say something you disagree with, put it up in the chat and I'll address it. You got a question for me, we'll address it on the fly. If Daniel's got something that he wants to add in, he'll turn his video on. That's going to be my cue to shut up for a little bit and let Daniel have a say. I hope he does that, because I think that's going to be really valuable. And when I talk about having some difficult conversations, some accountants over the last the last year or so have struggled, and some have thrived. There are many accounting practices doing extremely well at the moment. And here's a question. If your clients are making money, why shouldn't you? And this is a hard question to answer in the current environment, because we're so empathetic. We want to give, we care for our clients. There are practices at the moment who are making conscious decisions to not charge for applying for some of the state-based grants, particularly zero-based practices. Xero's got a fantastic app out. It takes half an hour to apply for it. They're choosing to do that. There are certainly plenty of practices who changed the way that they priced and engaged on JobKeeper. But when we're talking about the road to compliance advisory, we're starting to think about our practice a bit more as a business And a bit more as a way that we need to look after ourselves and look after our family and our staff. We need to be have recognition that our costs are going up. For all of the noise that we've heard about how bad some of the parts of the economy are going, the economy is actually going very well. Rent's going up, insurances are going up, wages are going up, wages are becoming even higher as we try to attract more talent into our businesses. And I'm hearing even small practices in the suburbs offering sign-on bonuses. I've heard of sign-on bonuses probably since pre-mining boom, 03, 04, when there was a real war for talent in the accounting industry. So we know that costs are going up and we really need to challenge ourselves. It's okay to make a profit and it's okay to charge. What we're going to go through today is 5 different things that you might be doing in your practice that maybe you aren't charging for the best, that needs to be bundled up into a concept that we like to call compliance advisory. Now, the best part about it is I think you're already doing it. This is not about learning a new skill. It's not about offering a new service. It's about changing the way we think about existing services. And here are some things that I would bet everyone on this webinar today are doing that I'd consider to be compliance advice. You're giving structure advice. You're giving tax planning advice. Some firms do tax planning as a big campaign. They get it all done before 30 June. Some call up a couple of clients. We're going to put some money into super. We're going to prepay some expenses, defer some income. Some don't do much and wait until they get to the year-end job, where sometimes it's too late to do the really juicy stuff, but maybe might do some tricks in the way they're doing their tax rec to come up with a better tax position to their client. The tax impact of super, if you're giving advice around this is compliance advisory work. And this is a really common one. Client calls up, hey, I want to buy a car. Should I buy it in my business? Should I buy it in my own name? That's advice. That's really important advice. And that's going to save a lot of money for a client if you get that right. Or it's going to maybe save them some CGT, FBT. There's a lot of considerations to go into that. Asset protection is probably the most common bit of major important advice that you give that often is done over the phone. We're going to talk about that in just a moment. Estate planning is a booming part, I think, of the accounting landscape at the moment. We have an aging population in Australia. The baby boomers are retiring. The baby boomers are passing away, and with that, leaving their wealth to the next generation. Australia is about to go through trillions of dollars of wealth transition. Estate planning needs to be done for them. And I think the accountants who know where all the skeletons are in the closet are probably the best people to facilitate that process. Not necessarily sign off on it, but certainly facilitate it. The same for wills and EPOA. ATO payment arrangements. Does anybody think of an ATO payment arrangement as cash flow advisory? I reckon it is. It's one of the biggest, for small businesses, it's one of their biggest expense. Being able to smooth out that expense is a massive benefit for them, and you're doing that. I know so many firms who include that just as part of managing tax affairs. FBT employee contributions. FBT, frustrating. Big companies can't avoid it. They take it seriously. Small companies, it's so hard to get clients to understand the importance of it. And what we commonly do is when we get to the year-end accounts, and then maybe you do this, maybe you don't, a little journal entry, employee contributions, and we miraculously make the problem go away. You've actually dealt with a potentially major compliance issue for a client there. Do you actually tell your client what you're doing with that? Or do they just not know that they had an FBT issue? As we keep going through some of these, CGT small business concessions, I mean, these save clients millions and millions and millions of dollars. And so often we give it away for free, or we just include it as part of what we like to consider to be customer service. I remember when I did my CA at Moore Stevens down in Melbourne, the old Moore Stevens, which is now Shine Wing. And I remember clients would call up and they'd get partners on the phone for an hour and a half, and I'd go to do the bill at the end of the month, and that conversation wouldn't be on the whip. I remember saying to Steve Allen, who was a partner, why didn't you do that? And his answer to me was, well, it's just customer service. That's actually what they pay for. And I didn't say it out loud because I probably didn't feel like I had the authority yet. I usually don't have a problem with speaking my mind, but back then as a younger accountant, I was probably a bit more shy. If that's what the clients value, then why weren't we charging them for it? And why are we charging them for lodging a tax return, which apparently they didn't value, but not the hour and a half advice that was given by a partner that probably made them millions of dollars? I mean, everyone's had those conversations. Trust distributions and dividend statements. The glory days of doing this stuff at year end are probably a little bit behind us. The ATOs, we're seeing more in ATO audits, crackdowns on these documents being done and signed before 30 June. And because we're using digital tools, there's more evidence about when signing happened. If you're using Xero or cloud-based ledger, the journal that you post in there to record a trust distribution or a dividend statement has a timestamp. If it's after 30 June, you haven't been compliant. You might have a franking account issue. You maybe haven't distributed your trust income properly, and it's going to be taxed at a really high rate. And on the back end of that, if you're using digital signatures, well, if it's signed after 30 June, it's signed after 30 June. So controlling that process and getting it done before 30 June becomes a really important step, a really important process for accounts. So you are already doing this work, but do the clients know that? For many, absolutely. But moving into compliance advisory is about changing the way the client sees you. You're already trusted, and we want just to change a little bit more. So I'm going to go through 5 steps and 5 examples of things that we can do. The first one, say no to quick tax chats. These are the time killers. These are the things that stop you getting through your to-do list. Clients call up starting a business. You ask them questions, you give them advice on the spot, and you recommend a unit trust. How many people have been through this? Yeah, g'day, Dave. Looking at starting up a business with a mate of mine. We're going to open a gym. Probably going to need to buy a bit of equipment. We're really excited about it. We've been running out of our garage for a while. What should we do? And in your mind is that you've been looking after the family for 15, 20 years. You're thinking, all right, do we have any interposed entity elections? Do we need a family election? They're going to be extra shareholders. They're going to come in. They're going to need to distribute profits. Well, they're going to need to put an employee share scheme in at some point. It's a gym. They're going to franchise. You're thinking about all of these things to recommend the right structure. You don't have to ask all these questions. You know some of the answers to it, but you're thinking about it. That whole conversation might take 15 minutes. You're going to recommend a unit trust. Say, yeah, no worries. I'll flick you a quick email and I'll send you some forms to set up the unit trust. Maybe they get an email with 3 or 4 dot points. Maybe they get a full report. That would be amazing. And you charge them pretty much what it costs to set up with ASIC. And if you're on one of the really good document providers, many of them integrate with BGL, then you probably don't have a huge cost for setting up this sort of stuff. The worst part, though, is how much value does the client put on a 15-minute conversation? So it took 15 minutes. It's the classic Picasso question. Picasso could paint a painting in 15 minutes. It could be worth millions of dollars. And Picasso would say, yeah, but you weren't here for the 30 years before today. This becomes a really big problem because these are the time suckers. It's really valuable to the client. I mean, they can't even trade without an ABN. So many accountants don't charge for setting up an ABN because it doesn't take long. But it's really important and really valuable. So step 1 is say no to the quick tax chat. Some accountants in that situation might do the 15-minute convo. Maybe you'd say, all right, let's jump on a Zoom call. Ideally, if we're not in lockdown, you'll come to the office, you get the whiteboard up behind you, you show off that you know the whole corporate structure off by heart. But it's time sucking and it's really hard for the client to see the value. A great way to solve that, reports. If you can get some template reports that template out what your advice is, the client gets something physical and chunky and meaty at the end of it, they feel like they can pay for it. We have changed GPS members who are charging $1,000 to $1,500 for these conversations now, which is new revenue. It's the same amount of work, but it's new revenue for them and the clients are starting to value them a lot more. I'm convinced that people don't value what they don't pay for. I see it at conferences, free conferences that people go to in the accounting industry. I see for everything that I consume that's free, I value it much less. I know if I pay for a magazine, I read it cover to cover. If I see an interesting link on Twitter and click on it, I scan it. Maybe if I get a phone call, I don't even pay attention to it. So I think that when people pay for things, they start to value it a lot better. Now, similarly with this thing, I'll jump in the chat. Can anyone relate to that, the quick tax chat? Has anyone had their day completely ruined by one of these things or just wondering where the staff time disappeared because some of these things happen? I bet many of you have. I'll go and just open my chat. Now, 100% says Anthony. The quick tax chat, mate. Well, hopefully, Anthony, I'm going to give you some tips that you can actually do something about it. Daniel.
Just an interesting point. I was engaging on Facebook the other day and part of a group, and a client was pretty much, confronted by another client, or an accounting firm was confronted by a client about their fees being a little bit too high for the work that they provided, right? And I know that the accountants in some cases will just lower their price to match what's been offered or try and do whatever they can to retain the client. And I put a comment on there, David, saying if a client is coming to you based on, the cost, then maybe they're not seeing the value that you provide, or you're not charging enough this is what I'm thinking now. You're not charging enough that they don't see the value that you provide and they don't attribute enough value to it. But if a client wants to stick with you purely because you are the lowest provider, then I question really some of the accountant's value proposition and that they haven't positioned it properly, or there's a perception that, that their price is maybe not reflective of what they actually do.
If you want to be a price dominant business, H&R Block are going to beat you. They're better at it. They're actually brilliant at it. They're really good, and I think we like to talk about them badly, but they're actually really good at what they do at that bottom price. Just get it done, churn it out, sausage factory type delivery. And Daniel, like, you've come to a lot of conferences. How many sessions have you seen where somebody stood up on stage and said you have to show your value?
All the time.
It's hard.
But it's hard to do.
It's hard. So at the end of this session, I'm going to show you how to actually do it. It's hard.
Because, and the thing is, right, that like we're in the SMSF space, and I've seen, this is incredible, right? I've seen people offering SMSF and audit services, and I had one in my inbox not long ago for $399 for a complete set of accounts and audit.
I was talking to my dad about this the other day. How can it possibly be done for $300?
Yeah, but then, you sort of think, well, and some people fall for it. And you get trustees that come to you and say, hey, I just saw this for $399, and I know some others there that sit at, certain prices. And it's like, well, a good audit won't cost you less than somewhere between $300 and $550, depending on what's in your fund. So how can you do both within one?
Daniel, I think I fundamentally think accountants don't charge enough. I just 100% believe this. I think it's crazy. And we're going to keep going through this session. I'm going to prove to you. I'm actually going to prove it that we don't charge enough. We don't charge enough because we're scared of the client. And we're scared of the client because we're not controlling the relationship well enough. I've definitely been there. I've lost money on clients that haven't done that right. Barbara's asked if that $300 was offshored.
Yes, 100%.
Yeah.
Yep.
Somebody's going to end up looking at this stuff.
Yep.
It's literally just too cheap.
Yep.
All right. Number 2.
I'll get out of your hair for a minute, all right?
Oh, it's pretty easy to do. There's not a lot going on here, mate. Number 2. Now, if you could relate to the quick tax chat, I bet you can relate to the back of the journal pad calculations. This is the quick tax chat for CGT. Yeah, g'day, Dave. That property that Mum left me, I just sold it, thought time was right. We've been holding it in the family for 20 years. Yeah, we sold it for about 3.5. Yeah, market's booming. I'm up 20% from last year. I can't believe it. Just thought I'd get it out. We want to do a reno on the kitchen, and I actually want to buy a boat because we're not going to be going overseas anytime soon. So I thought I'd do that, spend the money on a few. I hate it when clients would call me up and say we're spending on lifestyle assets, but that's a separate conversation. Now, my mind, everyone's mind is, all right, what small business concessions can we get? There's so many CGT concessions. What can we apply here? And it doesn't take long to do it. There's only 8 or 9 things that we need to consider. We usually know the client really well. You pull out your journal pad, you turn it over, you got a fountain pen or a fancy pen, or if we're more than likely, as we're all, so many of us are at home with kids at school, you've probably got a crayon or a Crayola texter, which I always end up with when I'm taking notes on my desk when my daughter's at home. And you start taking some notes, you work it out, half it because you got the 50% exemption. Yeah, no worries. You're going to have to put away 450 grand worth of tax. All right, no worries. Thanks, Dave. See ya. Oops, I pushed the wrong button there. It's my dramatic hang up. You've just saved that client like $1 million, and in a 5-minute phone conversation. It doesn't make any sense. There was such a better way to do that. The biggest problem that just happened there is what we need to do is not do that calculation on the back of the journal pad. We can reframe that conversation and say, well, actually, there's a lot to consider here. There's a huge amount of government incentives to save you some money. I haven't looked at this in a while. I'm going to flick you an email. It's just going to outline some analysis that I'm going to do for you. I'm going to issue some preliminary advice. Our fee is going to be around $300 for that, all right? And the clients say yes. Now, let's think about everything else in our life. Whenever I ask anyone to do something for me, I get a price. I call up a plumber. I'm particularly unhandy around the house. Like, I'm completely useless. These are soft accounting hands here. I pick up a hammer. I think it's heavy. I just want to put it back down. Daniel's very handy. Daniel's a man about the house. I'd imagine Daniel's out there at Bunnings on long weekends so he can build a deck or a pergola or paint a wall or something. He's very good like that. But For me, I don't want to do it. So I'll call someone up. They'll come out, they'll walk around and they'll give me a price, they'll give me a quote, and I can choose to proceed or not. I don't feel offended that they offered to give me a price. Well, it's a real world. So if you're doing something, if you're adding value, then Graham says he can relate to it. I'm not sure if he can relate to not being handy or to not charging for CGT advice. They've got two things going on here. Everybody else gives quotes, but accountants, because we're obsessed with the client relationship and potentially damaging our trusted nature and our trusted status, for some reason we feel a bit uncomfortable with it. I think the tide's turning. There's so much noise and information out there around pricing. Practice ignition leads the charge on some of that stuff. I think it's turning a little bit, but there's still this huge opportunity where we think, going back to my example when I was a graduate, that's the client service. I've just saved them $1 million. It has to be more than customer service or client service. It has to be an individual piece of advice. And here's another great point of reference. We're professionals. Right? We've worked really, really hard. You did your CA, your CPA, you went and got public practicing certificate, you do your 20, 30 hours, insane amount of hours that it is a year. Around JobKeeper, you're sitting there at 7 o'clock on Friday night reading ATO releases that change from the ones that they announced in the morning. You should be able to charge for this stuff, and I can prove the right way to do it. Doctors don't give advice on the spot, ever. I've never called up my doctor's receptionist and say, hey, I had some tests done, can you just give me the results over the phone? It doesn't happen anymore. I have to book a time. Once I book a time, I know it's serious. I know I need to pay. When I get in there, I know that I'm sitting down, I'm going to have a serious conversation. This is serious stuff. And when I go out, I know I need to pay for it. Now, doctors have the benefit that the government contributes to part of the fee. But there's always an expectation that if I want advice from a medical professional, I need to pay for it. That isn't that expectation in accounting services for some reason. And it's 100% our fault. We cannot blame our clients for this. We can't blame our clients for being needy. We can't blame them for wanting more off us because we should be controlling the client relationship, if not us, who? I know my suppliers, I push them as much as I can. I push them until they say, Dave, you're pushing us too much. And then they'll give me an out of scope quote and I'll send that internally to my team and say, hey, do we want to do this? Doctors don't give advice on the spot. There's no reason you should. And just by stopping and propping and saying, hey, no worries, I can help you with that. I'm going to send you an email just confirming the advice you want from me. And here's what I think it's going to cost. By getting this advice, here's what's going to happen. And I'm going to show you what that looks like in just a moment. My next tip, controlling year-end scope. So this is something that I think doesn't happen a huge amount of the time. I'm going to focus on one thing in particular, because this is how we sometimes lose track on the client relationship. If you do engagement letters every year, and you don't have to under the APES requirements, many of us do though, because it's sort of best practice. Most of the engagement letters look like this: preparation and lodgement of income tax returns and annual accounts for the year ended 30 June 2022 for, and we list the entities: Mr. Bontempelli, the Bontempelli Family Trust, and the Bontempelli SMSF. Now, Bontempelli's a high earner. He's probably one of the highest earners in the AFL. He's probably got some of those sports person benefits that you get, maybe some income splitting through some of the sponsorship income that he gets. A bit of work involved in the Bontempelli group. Wayne Locke reckons Bont's going to win the Brownlow. Wayne, I'd rather he won a Norm Smith and a premiership winning team, but I'll take it either way. I love the Dogs. The problem with this is not a scope, because Marcus Bontempelli, star captain of the mighty Western Bulldogs, is sitting there saying, great. He doesn't know what's included in the preparation and lodgement of his tax returns and annual accounts, but it sounds like everything. Whatever he's done during the year, that's included in those two words: preparation and lodgement of income tax returns and annual accounts. Two services, not two words. As an accountant, we've stuffed this one up because we've let him take control of what he thinks is included. There's such a better way to do it. I'm going to show it in a moment. We're going to detail out everything. There's so much you actually do in that year-end job. So by detailing it out, it's obvious what's not in it. So if you do a year-end scope and it doesn't include a CGT cap for a major family asset, you should be able to charge more for that. Because we've all lost money on jobs where an asset got sold. We barely knew the asset existed. It was in some work paper somewhere, it formed somewhere, maybe there's some income, but there's no cost base ever done on it. I've lost days trying to work out cost bases on some of these assets in the past, particularly the properties. So making sure we control the year-end scope is a really important part of moving into compliance advisory and separating advisory work out from the act of lodging the returns. Now, the lodging returns is critical. That's the start of everything. But all this other stuff and this proofread stuff we do around it, that's pretty important as well. Tip number 4, explain your value. I'm sick of going to conferences and seeing things. You need to explain your value. You need to do value pricing. I'm going to show you some tips on how to do it. Right, the CGT concessions, they can save your clients millions. Don't know how much. Because if I say to you, hey, look, I can give you advice. I can save you about $1.5 million here. It's going to cost you $350 for me to write that advice for you. Do you want to do it? Yes. Spend $350 to save 1.5. The most educated clients will do this, and the least financially literate clients will do this, because it doesn't take an educated person to work out that's a monster return on investment. Now, the accounting mindset says, yeah, but that's not a big deal. Like, everyone would have applied the CGT concessions to that. I'm not doing anything special there. But you are, because you're the person the client called. You've earned their trust. They think you're the expert on this. I promise you, 95% of clients won't have any issue at all paying $350 to get CGT advice if they can save $1 million. Especially because for a lot of families, the sale of an asset like that's a once in a generational type thing. It's a big deal. They want you. Most of them want you. We've all got clients who call us up after the fact, and we say facetiously, "I wish you would have called me beforehand. I could have helped you out." Whatever. That's a different story. But I think actually comparing what you're charging versus potentially how much they're saving is such an easy way to explain value. The second way is when it comes to structuring work. I'm going to tell a story. This happened in Melbourne last year during lockdown. The 5-kilometre radius, for me, I had a 500-metre stretch of Brighton Beach, which was counted in my 500 metres, in my 5-kilometre radius. So me and my best mate, twice a week, would drive down and would just walk back and forth along that 500-metre stretch of beach, making sure we didn't go outside the radius at night time, just to get some companionship, which is something I know we all really crave when we're in lockdown. And he was doing quite well for himself, runs a digital agency business. He's got a family home. He's got a fair bit of equity in it. His wife's a high income earner working in marketing. He's talking to me about his structure, and he's got a trust, and he's the individual, his wife's the individual trustee. I said, mate, just get a company in there, just get a corporate trustee. He says, yeah, my accountant's talking to me about it, but it's going to cost me like $1,000 to set up the company and like $200 a year or something with ASIC. And I just don't need it. It just seems like a waste of money. And I said to him, mate, it's like $1,000 and $200 a year to save about $2 million worth of assets. And just, I let it silent for a little bit. Yeah, actually, it's a pretty good point. I'd probably be pretty stupid if I didn't do that. I said, yeah, you would. So when we're trying to explain value, we're trying to demonstrate the return on investment versus a benefit they're getting straight away. And they're always financial benefits. It's either money saved through reducing tax or assets protected through the provision of tax structuring advice. There are two ways that you can explain value. Now, I'm actually going to show you some templates in a moment that we've got in Change GPS that do this for you. You can take your notes furiously, screenshot it while you're doing it, and try to do it yourself. Not a problem at all. The 5th tip that I've got here, which I'm hoping will load up at any point now, detail the plan. A lot of clients don't actually know how much is involved in the work here. They don't know that you do 17 things to lodge a year-end tax return. They don't know that when you're recommending a structure, you're considering about 20 different elements of different structures that are out there. You're doing this yes-no decision tree in your head as you're trying to give the advice to them. The more detailed your plan is, the more confident the client is that, one, you know how to do it, that your price you're charging isn't a rip-off. If they're not sophisticated clients, and a lot of us who are winning, some of these younger millennial Gen X businesses, not as sophisticated clients yet, they're on their journey. They don't know how much this stuff costs or how much work's involved. So the more detail you can give them, the more likely they're going to realize that the price you're quoting is fair. Now, let's go back to me not being handy and getting a plumber into my house. Plumber comes in and said, yeah, look, got a bit of a problem here because the mains are all the way over there and we need to get it to this point here and we need to get it upstairs as well. So we've got a pressure problem trying to get it down there. You've got some older taps in here and the pipe size doesn't line up with the pipe that's currently standard. So we're going to need to fix that at all. All in all, it's going to come to $18,000. I have no idea what any of that means, but it sounded detailed. He sounded like he knew what he was doing. For 18 grand, right, that's a lot. If he said it's going to cost a couple of $1,000, say, all right, well, you seem like you know what you're talking about. Detailing the plan is critical. And again, I'm going to show you in a moment how to do some tips around that one. Finally, I've got a bit of a bonus tip. Don't shy away from price. Everyone does this. We're also scared about this because the second we mention a price in anywhere in the world, any product, any service, we're asking the client to consider how much they value us. Every time I go to Coles and I do my weekly shop and it's like $250 and I look at, the 4 bags of stuff that I've got there and I think, geez, do I really need those $8 mangoes? Like, how happy is an $8 mango going to make me? And I start to consider my buying decisions. If you're an accountant that's not offering a lot of advice, yeah, a client might actually consider if you're the right accountant for them. But if you're like the overwhelming majority of accountants who are doing a great job for their clients, you're not going to have a problem here because you're just reinforcing the value. So don't be scared. Don't shy away from price. Everybody charges and everybody's prices are going up. And I know that particularly New South Wales and Victoria, our mood's low at the moment. I moved to Brisbane the day after the second lockdown ended in Victoria, the 3rd of December. My wife's family's up here, so it was a great opportunity for us to spend some time with them. And I know that mood, but I also know that so many clients are killing it at the moment. I know that everything's becoming more expensive and it is for you as well. So don't be afraid to put your price at the end of this process. Now, what I've actually done here is I've gone through a process that Change GPS pioneered, Timothy Munro, our founder, pioneered, called Value Plan Price. I'm going to show you what that is in just a moment. But before I do, and this is the Value Plan Price method we're going to go through. Before I do that, I'm going to throw back to Daniel. Daniel, do you have any questions for me before I actually pull up some templates, which is going to show everyone on the call exactly how to do this stuff?
No, I don't actually have any questions for you, but just an observation I assume that I'd like to probably pass on is that it is true. Like, when you think about the way that you frame the conversations and the way that you frame the context, there's so much value that accountants bring. And I said this before, I just wish that accountants would actually understand the magnitude of that value. And I can tell you one thing, and I know that the audience will know this, that BGL Corporate Solutions, we don't position ourselves as the cheapest software provider. Never have, never will. We know the value the software brings. We know the difference the software makes. We will stick to our guns because we know that our software is of great quality. Accountants, you are great quality people who provide a great quality service, and you should make no excuse for what you charge. Zero. And if people don't like it, I know that that many of you find it hard to let some clients go, but I speak to many accountants within the industry, and they sometimes celebrate certain clients leaving because when they work out what they make from them versus what they actually charge, what they charge them versus what they actually make from them, they're actually in the negative.
Oh, Daniel, every accountant has their hit list of clients that'd rather not be there, but unfortunately get a little bit too addicted to the revenue that client's producing. We actually have a template in Change GPS, a sacking the client template, to make that a little bit easier. And sometimes people do it. Karen's made a comment here. A firm charged $220 for a company wind-up. That's dirt cheap, by the way. The other accountant who dealt with other companies this client was involved with charged over $2,000. Karen, how'd you feel after that? Because guess what? The client paid it. The clients actually, well, I don't know the whole story, but more often than not, the clients actually pay that. You've charged 10% for it. And personally, I reckon $220 for a wind-up is a bit cheap, or definitely on the lower end. I'm sure you had some pricing strategies for it. But I think that we have this status in society. We have this public trust in the accounting profession, just like doctors do. We should be able to charge for it.
Yeah, but then David, there's also people that go the other way. Yeah. Like, I've seen some work being done where a client was charged $13,000 or something like that for a $550,000 super fund.
You can still rip people off. We're not trying to be rip-off merchants here.
And when actually my dad, my dad's an accountant, David, and I know this from a similar sort of school as your dad, and we always come back to them too. My dad charged $1,300, including the audit, and he felt guilty charging it because of the lack of work involved. Mm. Right. So you're not suggesting here go out and rip your clients off, or what you are saying is position.
Fair price.
Yeah. Correct. Go with the fair price.
So let's take that CGT advice. $350 for something that's going to take you 20, 25 minutes. It's a lot of experience has gone into it. A lot of client knowledge has gone into it. If you can find a template report so they get something physical at the end of it, they're going to feel like they get the value out of it. In GPS, we give standardized or recommended pricing for a lot of these services. Don't rip people off. You get a bad rep. And, maybe $2,000 is quite a lot if it's a pretty simple wind-up, Karen, if you're just literally filling out the form. But I think there's a really good lesson in there that there is a midpoint. And the lesson there, Karen, if the client paid the $2,000 and didn't think twice about it, that's a good reference point that's where the market thinks this might be okay. Maybe $2,000 is a bit much for that. All right, I'm going to show you some ways to do it. Now, in GPS, here are all our different apps, core client, under resources. We have tons of letters that you can send out to your clients to help do this. We've got an under the value plan price method. I'm going to show you some of these in a moment. At the moment, we've got client emails around the end of financial year tax return, pulling it, getting all the stuff in, all the info for the year-end job. For asset protection, we've got emails about trust deed update recommendations, urgent document updates that sometimes come out. We know that there's an issue at the moment around updating SMSF trust deeds, and if you do update them, making sure you get the right type of accounting standard that applies to them. So we do all of that stuff, but I'm going to show you the theory behind it so you can do it yourself right now. And where it comes down from is the value plan price method email template. Now you can copy, screenshot this if you want to do this yourself, that's fine. Action required is the subject line, recommendation. This is serious. You want to set up a new structure. You want to go into business. You need to take action here. I refer to our meeting or phone call we discussed that would result in list out the key benefits. This is hard to think about, but what are the key benefits of getting the structure right? Well, you actually know it because in the call, you ask the client, what do you want to do? I want to minimize my tax. I want to protect my assets. I want to generate some wealth for my children. Common things that would come out in our conversations. The value to you, insert a summary of the actions you want to recommend, insert the overall dollar benefit, the plan that you need to do, and then the price. And this is a standard format. Once you start thinking like this, you start to approach many conversations in life about it. I know that's happened to me as I've started to master this and do it more and more. And then we end with next steps, putting the ball back in the client's court. How often have we said to the client on the phone, you need to do something, and they don't do it? When they get a formal email like this, they're much more likely to take action about it. And they're going to take this theory and apply it to an actual service item. We're going to apply it to business structure advice. This is a template, again, that we've got in Change GPS. Now, in this situation, we haven't answered the client structure advice on the phone. We've said, look, not a problem. We can give you that advice. If it's okay with you, I'm just going to send you an email outlining what our approach is going to be and an estimated fees. I'm going to send that to you in the next 10 minutes. Email me back with what you want to do, and then we can prepare that advice for you. It's what the plumbers do. It's what the doctors do. It's what every other profession out there does. Action required, business structure advice recommendation. And because you've got a template, you can actually do this in 10 minutes. Hello, business structure advice recommendation. I refer to our meeting. Here's the value to use. Now, what we've started to do at Change GPS is instead of you having to come up with what these things are yourself, accountants brilliant with numbers, with words a little bit shakier, we've now put all the standard reasons in here for you. So for example, we'd like to provide you with advice and a business structure advice report. We're going to give you a report, not just the advice. If you have the correct business structure, you will receive the following benefits: asset protection, tax reduction, flexibility. Everyone wants this from their structures. I want it from mine. I'm probably in the process of setting up an SMSF at the moment because I want a little bit of tax reduction strategies for me, and maybe also a bit of flexibility in the future with my family. The plan, look how many steps I've got in here. To achieve the above benefits for optimal business structure, we need to, again, the comparison to this is just giving it away on the phone. Review your current structure needs and objectives with you. This actually happens when they come into your boardroom or it's on the phone call. Consider, research, and compare all available business structure options for you. Let's pause on this one. Many accountants already know the answer, but your brain's ticking over 3 or 4 different scenarios, past conversations you've had with the client, maybe a recent email you saw about something the ATO is clamping down on. Maybe you like discretionary trusts, maybe you don't. Maybe you like bucket companies, maybe you don't. You're thinking about this. That is consideration and research. Lawyers charge for it. Lawyers have a shower at the end of the day. If they're thinking about the client, the time hits the whip. Accountants, for some reason, many of us struggle to do that. We're then going to prepare a business structure advice report for you, which includes our recommendations, the action plan, diagram of your optimal business structure. We're going to meet with you to discuss your structure advice report and answer any questions you have. Clients want this. They want this level of governance from their advisor. Price, we estimate that our price for this recommendation will be $750. It's a small price to pay up front to give you the best protection possible for your family's assets and to reduce possible future stress from claims by aggrieved customers, suppliers, and employees. Screenshot this now if you want to. You can use this. Next step, simply email back confirming you're happy for us to provide you the business structure advice report. I think in this situation, that's better than issuing a new engagement letter. You've probably got your engagement letter for the year-end stuff already for the client, and email back is going to be okay. And email back is fine under APS standards, as long as you're doing other things, but for an out-of-scope item, an email back is certainly fine. Eleanor's asked for handouts. Eleanor, you get the slides 100%. But if you want to use these letters, just take screenshots now. There's about 300 odd documents like this in Change GPS. Next step, we're looking forward to receiving your instructions and helping you protect your family assets. Done. So what we've done here, we've got the value, asset protection, tax reduction, flexibility. The plan, here's all the work I'm going to do for you. The price, we were at $750. In general, I find smaller firms with smaller clients might drop that to about $500. The most I've seen for something like this is about $1,250, $1,300. And I'd say they're almost corporate-like run firms. Like they're really well run, probably a little less. I don't want to be too critical, but maybe the partners have less client time. Maybe there's managers in there. And all of those costs add up. Those firms are much better at pricing, I find, and the value is still there. They can get away with those prices. They've usually got bigger clients as well. And then we've got the next steps there. So that is an example of a value plan price email. The next part of that process, are there any other emails I want to show you? A good example of that, value plan price. I'm going to show you another example of this, is the year-end game plan report. Now, we did this. We wanted this to get out. You could probably still do it now, just change it a little bit. This got sent, GPS members sent this out at the start of June when you're really getting into that last big push for tax planning. This is a pretty big, it's 1,000 words. Action required, your 2021 year-end game plan. Now, everyone, I promise you, you are doing this work already. There is no actual extra work involved with you for this. We're just communicating with the client the type of compliance work that you're planning to do for them. Reducing your tax planning for your tax payments. April, May, tax planning strategies to reduce tax plan for year-end actions. You're doing this anyway. We're just telling your clients now. In June, we're doing trust distribution resolutions. In July, we're doing a tax flow plan, which is a forecast report where I've got the forecasts out in the next 18 months of ATO payments. In April, May, June, we'll provide you with the tax planning report. Then we'll do trust distributions for you. Then we'll do the tax plan, explain what that is. FBT. Now, so many of us struggle to get FBT engaged with our clients. We just do that employee contribution. We've got some really important information in here. Often, the problem with doing an employee contribution after 30 June is, how do you get your STP finalisation done? If you need to include employee benefits on the STP, you need to know what the number is by 30 June. I don't know how it can wait. If you've got any ideas about how you're getting your STP lodgements correct, if you didn't do the FBT calc by 30 June, I'd love to hear them. But I think, unfortunately, this is a bit of extra workload that needs to happen before 30 June. We've obviously passed it now. The value to you, the tax planning report will help you reduce tax payable, work out the best way to distribute business profits. The plan of work and our price, here's a price guide of all this little extra bit of work that we need to do for you. Now, I know so many accountants think, yeah, I know I need to do this for the client, but they think it's part of the bundled year-end job that we do, because on our engagements, we do preparation and lodgement of tax returns. Well, here's a way that you can start changing your client's behavior. And look at this tax deductible price. How smart's that? Tell your clients your fees are tax deductible. It's actually about 30% cheaper than what we're quoting. And then we get the next steps. So that's another example of value plan price method in action around the most basic thing, lodging the year-end accounts. But we've just changed a little bit the way we communicate with the clients, and we're trying to get the clients to view our services as individual services that we provide, rather than this big bundle of work that happens at year-end. That's some examples of the value plan price process. If there's any questions, jump them in the Q&A, jump them in the chat. But I want to show one final piece here, which is, if I get something physical, I always think it's more valuable. One of the biggest problems with accounting advice is it's often given over the phone, or it's given in a file note or an email with a few dot points. It's very hard for me to value an email. Just in general, even if the advice is fantastic, for me personally, put a PDF attachment on your letterhead, put a recommendation in it. I know I need to go to a rheumatologist. I don't even know what it is. My physio sent me there. The physio doesn't just call up his mate and say, hey, Dave wants to book in a time. He writes this thing that's on letterhead. There's all these letters after his name. It looks very professional. I'm sitting there thinking, geez, I hope my private healthcare covers this. Isn't going to cost me a fortune. It's a much better way to do things. So I think getting a report at the end of the whole process is a really important part. I'm going to show you how we do that for structure advice. So I showed you that VPP email. You've done the phone call. The client, you've sent that email. The client says, yeah, no worries, $750, that's fine. You're sitting there thinking, God, now I need to write a report. How am I going to do that? Because I told them I'm going to write a report. In GPS, I'm going to do a little bit of a product demo here, everyone. If you want to switch off because you're going to want to go watch a Premiere announcement, that's fine. This is how we do it in GPS. If you can wait and have a look at this report, you can try to do it yourself. No worries, just copy the sections and you'll be able to work it out. So pre-fill questionnaire and check. Most of the time, you know roughly what structure it's going to be. Let's just say we're going to set up a unit trust. Here is the standard Q&A that you would go through when recommending a unit trust. And you don't ask your clients all of this. Some of it will just be done in your head. How many family groups are involved in the business? I'm saying more than one here. Will the structure be for the operation of business? Yes. Is it likely a family trust election interposed in any election will be required in the future? No. This is a file note, by the way. It just saved you a lot of time on a file note. This is a yes-no decision tree. If we're a super techie company, we'd probably call it AI, but it's not AI. It's just some great logic that we've built into our code. Is your client wishing to establish a new business or buy a business? Say buy a business. What's the name? We'll call it Dave's Machinery. Dave ain't buying machinery. Barely knows how to start a car. Will the business hold assets in excess of 200 grand? Let's just say yes. Maybe it won't, but I want to say yes now because it's showing a little bit of complexity here where you can recommend an asset holding trust on the side. I personally love this structure, but an asset holding trust on the side, as profits accumulate in the trading entity, move those profits out to the asset holding trust, de-risk all of the assets of the business by putting it into a separate entity. That's a separate structure conversation that we can have later. Meeting info. I've got XPM connected here. So I'm going to bring in bean roasters, send the document from me, a little bit of client personalization, objectives and concerns, minimize tax, protect assets. These are the two biggest ones, always. What about some fun ones? Don't let my kids access the money too soon. I've had those conversations. You can put whatever you want, and this is based on what the clients told you they want to achieve. Very often, if you do end up in court throughout your career, it's usually because of a business failure or a divorce. They're probably the two most common reasons an accountant ends up in court. And sometimes structures get questioned. If you have this advice report that you can pull out, you can say, well, client, you said you wanted to minimize your tax. That's why I recommended this. It becomes very hard for the independent expert that the other side's brought in to challenge you because these are excellent notes. And then what we do, we're going to say, all right, this is the Boyar Group. Now I'm going into this business. So I'm the risk person. My wife's the asset person. She's going to hold all the shares. And let's say I'm going to go in to the Tramontana group. Daniel and I are going into business together. Finally, Daniel, after all our ideas, we're finally going to do something. Dad's a risk person. Mum's the asset person. Shares are held by mum. Pretty common structure.
Do our dads do the accounting?
I think my dad does the accounting. Your dad does the audit.
No, my dad my dad provides the training on the calculator.
Yeah. It's funny. Like these are tools that my dad's got access to change GPS. He doesn't use this. He said to me, I set my clients up with the right structures 20 years ago. What do I need this for? I said, very well done, Dad. You're right. We then get into the fee schedule, right? Now, I'm going to give you a great example of accountants not charging for the right things. Everybody knows this, but did you know a business cannot trade without an ABN? It's really illegal. There's big problems for doing that wrong. But so many of us don't charge for setting up an ABN because it takes 10 minutes. Put it out as a separate line item. So look at what I've got here. Establish the unit trust. It's probably $1,000. Incorporate a company to act as a trustee. $250. Register the unit trust for all of the registrations that you need. $500. Register the company for the ABN and the TFN. That's a cheapy one. That one's easier. Establish a discretionary trust to be the unit holder of the unit trust. Register each discretionary trust for ABN. Look how many steps I've got in here. So the client's looking at this saying, oh, there's a little bit of work in here. This is actually quite a bit. I should be paying for this. Versus the current method where we think, well, I've got a Light Year Docs account. They give me unlimited docs. It doesn't really cost me anything to do this. $1,000 for the lot. There's so much money left on the table, all for exactly the same amount of work. There's no extra time in the work here. Then we've got the same thing for establishing an asset holding trust structure. I'm going to say include payments here. I'm just going to show you why in a moment. You don't have to do that, obviously, as we get on with this. And that's going to produce an advice report for me. I'm just going to produce that report now. Look at this. Unit trust structure. Look how professional this is. This would be white labeled. You'd have your logo on it. 10-page report. We literally just made that in 4 seconds? Your current situation. This outlines the yes/no decision tree that we did at the start there. So that's your file note. Done. The family group, objectives and concerns, essential features of unit trust. We're educating our clients on what they're getting themselves into. So many clients don't understand the basic elements and roles and responsibilities of their structures. Alternative recommendations about joint appointers, unit holders agreements, corporate trustees, really explaining all this stuff. A client can never, ever say to you now, why did you put me on this expensive group? I'm paying you 15 grand a year. I don't know why. My mate down the road went to Bali and he got a tax deduction and he just runs it out of himself and he spends $500 and H&R Block does his tax return. Well, he's not getting this. Our fee schedule comes down here. Now, in a report that's 10 pages long with all this advice, the fee schedule doesn't stand out anymore. But an email with 3 dot points and, hey, we're going to charge you $5 grand, it's hard for me to see that value. Your next steps, additional information. Here's the really cool thing. Automated diagrams of what the proposed recommended structure is. And this isn't customized to the client. This is just to explain roles, responsibilities, who does what, why it's so big, why this is a serious undertaking for the client to get in. We do that for the asset holding trust as well. This is part of our GPS Core Pro plan. Now, if you're following along, you can screenshot this and try to write it yourself. I'll go back. I'll just count. There you go. We'll go through these. And you can build these standard reports in your practice. I think that structured advice is a really common compliance advisory product or service line. I think accountants do it all the time. And I think we massively undercharge for it because get this right, you're saving your clients a fortune in tax, giving them peace of mind through really good structuring. I don't know if people are screenshotting this. I'm just doing it a bit slowly for you. And I just think it's an absolutely brilliant piece of advice. What's really cool though, Daniel, can I show how we integrate with BGL? Is that all right, everyone? Can I show you how we get some BGL integration? Because many people are sitting there saying, oh, is this got anything to do with the corporate register?
Of course you can show it.
Thanks, mate. Thanks for the rapid response there.
I've got to keep you waiting.
BGL has a lot of information about your clients and you can update it really quickly and really easily. And you might be using BGL to help with that document creation as part of this advice. We have an app called Blueprint. It integrates with XPM and BGL. If I click BGL and I've got in my backend settings, when you get the pop-up, connect your accounts, we do all that automatically for you. It takes you a couple of seconds. I'm going to bring a group in 1, 2, 2 seconds, just like that. I've done my structure chart. Now, what we do in GPS, the structure chart has an auto hierarchy. Trustee, trust, companies, individuals, super funds. That's the standard rule that we have. Now, that's good. It doesn't tell the best story. You really want to be telling stories to the clients about this. Now, in most firms, graduates, okay, I'm gonna own this. When I was a graduate and had a big night out on a Thursday, this was Friday's work, all Friday, dumping time wherever I could, then and trying to get away with it. But what you can do now, I'll move the trust over here. Have a look. I'm going to make this a bit better. I've got the trustee there. I've got a trust. I've got some individuals here. I've got a super fund there. I've got a oh, that's interesting, isn't it? I've got a company there. I've got the trustee of the super fund. Now, what we do, if a trustee is a company, we show it twice because we all have some bad groups where businesses are run out of trustee companies. For a super fund, I don't think it's that useful to have it represented twice. I'm just going to remove that. I've got my trust there. I've got bean roasters over here. That's my trading entity. There's the trustee of the fund again. I'm going to remove that one. I've probably got a bit of a better group structure here. I need to connect. I can add a relationship. Joe Bean, He goes to the fund, Mary goes to the fund, and now as that moves around, look at that, follows me around. How Microsoft hasn't invented that yet, I don't know. Too busy making Teams really good. I love Teams. The reason why I've set it up like this, though, is when I export, I can toggle my risk overlay. I can say, right, here's the risky part of your business, and here's the asset protection part of your business. Now, in the process that we just went through, we just recommended setting up a new unit trust for the client. So I can just drag and drop in here. I've got a new trust. I'm going to add a relationship to Mary and Joe. So there we go. There's our new trust there, new recommended trust. I'm going to edit this one. I might make it a nice, I don't know. There we go. Nice fancy blue. And this could be proposed unit trust. Now imagine your client got this at the back of that report. If they don't pay $750 for this, I don't know, something wrong with the client. I'd be a bit worried. We're almost up with time, Daniel. It's 11:57. That's a little bit about how Change GPS, I suppose, helps with this issue of compliance advisory. The key takeaways for me, it's about changing the way the client sees the work you're already doing. It's about not rushing to give the advice because we're proud knowledge workers, but stopping and propping, engaging properly, framing it properly, and then using tools like Change GPS and BGL to deliver fantastic actual advice and reports on the back side of it. And I'm going to read out an unprompted comment, Daniel, if that's okay. Wayne Locke, it'll cost you more time to create the documents from screenshots than it does from a GPS subscription. I appreciate that, Wayne. I hope you're enjoying the products very, very well at the moment.
Well done, David.
Thanks, Daniel.
You even impressed me.
Really?
Yeah,
you're not an easy man to impress.
You're a good sort, and I know that everyone that listened today has walked away with something to better the way that they engage or the way they position themselves in the eyes of their clients, and I just love that.
I hope so. You know, look, if you're scared about making some of these changes, pick one client. Just start with one. Don't think about your whole client base and doing this massive change. Just maybe the next time you get a structured query come in, just try it once, see what happens. I'm confident that you'll get a good result. We've got about 500 firms working this way at the moment. But just don't, you know, I think when it comes to change, we don't have to change everything overnight. We can take a bit of time, do it on a client by client basis. You know, maybe even if you've got really good clients who are your friends saying, hey, well, look, we're trialing a new way of working. I'm just going to do this for you right now, and lower the friction that can happen when you're making changes like this. I think you find you'll get a really good outcome.
Agree completely, David. And look, I just want to, on behalf of BGL, just thank you too for your support. And I know that what you're doing makes a difference. And I love being aligned with people that make a difference, Dave. And you've known me for a very long time. And you know, to seeing your progress, your growth, and then moving into what you move into now, and bringing your knowledge, you know, in accounting to software and how it can make a difference is what I love.
Oh, thanks, Daniel. It's not about me. It's about the great people who are on the call today. I hope we're able to help you. I think we've got a bit of a poll. If you are interested in, you know, no pressure, obviously we've got a lot of things going on at the moment, but if you do want to find out about Change GPS, I think we can chuck the poll up, and I'm not sure if we do have that, and we can get in touch with you. If not, just jump in the chat, and we'll have Jack's on the call now. He's from Change GPS. He'll follow it up. Jack, maybe you can put a link in the chat for anyone to book in a demo if you are interested. But again, no pressure. I hope you just learned something from today.
Yeah, and look, and what we'll do too, David, is that for the attendees, if you'll give us an email template that we'll shoot through to everybody, and they can contact you from that too. Thank you, David.
Thank you, Daniel.
Thank you, everyone, for attending today. We know it's an hour out of your day, and we know that you know, it takes sacrifice to do what you've done to support this presentation. But I hope that you've walked away with something, and with just a better understanding of how you can better engage with your clients, position your services, and more importantly, value your services. And honestly, don't make excuse for your pricing, because you bring a tremendous amount of value to your clients, and you save them a tremendous amount of money too, and that's really important too.
Thank you, Daniel. That link, if you do want to find out a bit more, has been posted in the chat. So click on that, and you'll get a follow-up email with some info. Have a great day, everyone. Look,
Thank you, David.
Tough if we're in lockdown, but we have to put a smile on our faces because we don't have a choice.